You're looking at a daily chart of the Nasdaq. This is my weekly review. Yesterday was the 1-year anniversary of the low. Friday the 13th, October 13th was the 1-year low here, 10,088 on the Nasdaq. It rallied a little bit, then retested this low here back at the end of the year. And then in January, we saw a nice sharp rally, which formed a cup, with handle pattern here. And then the breakout came on May 10th out of that cup with handle pattern. So where's May 10th? Didn't look like much. Yeah, 1% move with volume higher than the prior session. But, the Nasdaq had a 37%, peak to trough bear market. It started to emerge off this double bottom, the bottom and the retest. And then it formed a cup with handle. And then we started getting into this new bull market or new uptrend. And then recently we had this pullback after the move. We had a double bottom correction here where it went down to 13,161, rallied up, and then made another low here, 12,963. Now, if we take a look at the weekly, the last couple of weeks have been higher. So it's making higher lows. The last couple of weeks, even though last week it was down 24 points, the Nasdaq is up 187 points or 1.42% for the month of October. And we could see these 2 months of August and September, which were pretty rough months and very difficult to navigate, down 2.17% in August and down 5.81% in September. So now October, the tone is a little better. The market, obviously, it's up 1.42%, so it's doing better than losing ground, but it has been a tough market. And you could just tell by looking at the, on last week, it came up to its 50 and was rejected, which, is expected. That's likely to be resistance until it's not, until it can power through. So I always ask myself, has the market proved itself? And at this point, it has not. It's got to rally through the 50, and these short-term moving averages have to rally through the 50 as well for us to get into a power trend and to get into a real rally here, a real uptrend. It's been kind of a weak, if you want to call it a new bull market, because not many stocks are participating here. This is the IWM, the Russell 2000 index, and this thing is just, you wouldn't call this a bull market here. This is a more risk on index, stocks that aren't well capitalized and don't have the earnings power that a lot of the larger cap stocks do. So that has not participated. The financials, there's been a lot that hasn't been participating. The biotech stocks, so it's been a real stock pickers market. This is the Dow Jones. We could take a look at this monthly. You could see the 2 months that it was, it had the pullback, it had the double bottom or the retest, and then it's been rallying, but you could see it's been caught by resistance as well. It had a down couple of months there, August 2% and September 3.5%. And now it's up 0.5% here in October. So it's doing a little better, not as well as the Nasdaq though. And the last index I'm going to take a look at is the S&P. This is the monthly chart. You can see the same thing, the peak to trough bear market, and then the rally. And now in August and September, it corrected, and now it's up nearly 1% in October. So October has been better, but we expect more. I just wanted to point out that, if you're a bear and you get these every so often, right? Like in 2000, 2001, and in 2008, 2009, then we had a little blip here in the COVID crash, and then we had a nice bear market here. You're not going to get these all the time. So I don't know, if you're a bear and you're thinking that, the market's going to crash, I just don't think it's going to. Obviously could, but this is the Nasdaq where it had that nasty bear market with, the dot-com crash in 9/11, 18 months into the bear, the 08, 09, and then, recently 37%. That's a big bear market for, an index. 37% is a big move. And it looks to me like it's just, emerging from the bear. But that's, that's my thesis. That's my theory, led by artificial intelligence, and the mega cap tech stocks. I'm going to take a look at Apple here, forming a double bottom base, just like the Nasdaq, but it has been able to trade through its 50, and it's pulled back on Friday the 13th. It was not good. It was very spooky for tech stock. It was down 1% and closed a 0.5% above the 50. So Apple looks a lot better, right? They're just trading in bases here, and they all have earnings coming up. So I don't expect much ahead of the earnings, but we'll see what happens after the earnings reports. But they are, like the Nasdaq, this is nearly a 3-month base here for Microsoft. This one again, the short-term moving averages now are moving through the 50, and this one's looking better as it consolidates in a base. This is Google. You can see it's got its moving averages stacked, the 10, the 21, the 50, and the long-term 200, all uptrending. The RS line uptrending. Google looks really strong. Meta, they're going to report too here. Man, it's going to be exciting here the next couple of weeks. Consolidating within a base, it traded below the 50, at the 50, below the 50, now above the 50, but it's got the 10, the 21, trading above the 50 now. So the short-term moving averages are trending higher. The RS line trending higher as well. Amazon is the weakest of these mega cap tech stocks. I don't know, it met with resistance at the 50 as well, just like the Nasdaq. Tesla, they report Wednesday, along with Netflix after hours, and this is just set up in a base. It's above the 50 and then came back on Friday and traded down to it and closed, right at it, essentially, on Friday. And then NVDA, the last of the Magnificent Seven. This one just setting up in a base as well. Looks fine to me. Just corrected 500 to 400, and then rallied back through its 50 and just consolidating in a base. On Friday, it pulled back to its 10 EMA, and it just needs time. It needs time to consolidate more, and they don't report earnings to November 21st. So anyway, that's it for the Magnificent Seven. I did mention that it is a stock picker's market. And if you're into the drug market, man, they have been hammered. Unless you're in Eli Lilly or Novo or Vertex, I mean, there's been a lot of drug stocks that have been selling off hard for a while now. But this is Eli Lilly, broke out of a base, ran up to 600, pulled back to the 50, found support. Stocks that pull back to the 50 after breaking out of a base, usually find support, not always. There's no absolutes in the market, but you can see the 10, the 21, and the 50 stacked. The RS line trading higher, so it's relative strength to the S&P. It's phenomenal. What can you say? Lilly and Novo Nordisk really looking strong. This one broke out of a consolidation here, this flat base, on August 8th, and ran up to 100, then pulled back to the 50 as well. And then last week they had some big news. They stopped their trial for their renal kidney failure. So it's not only going to be used for diabetes or weight loss, it can be used for kidney patients as well. They also raised guidance on Friday. So while everything was floundering on Friday, this thing was up, nearly 2%, nearly, 11% for the week with volume. You could see these big volume bars here. On the weekly, here's Vertex. This one marches to the beat of its own drum. You can see the consolidation, move up, consolidation, move up. It's been a flat base pattern now, and just starting to emerge out of this flat base. This is, you can see the RS line shooting straight up here. So it's relative strength compared to the S&P. Very nice if you own that stock. Anyway, that's enough for the drugs. I like the cybersecurity stocks, obviously, with the geopolitical, turmoil. These stocks have been in vogue here recently. You can see Palo Alto Networks had this massive consolidation. Then it moved higher out of its base, and now it's in another consolidation there for 14 weeks. This is trading near a pivot area here, and this one looks good to me. CrowdStrike, another one of these cybersecurity stocks that was trading in a base, and it's just emerging out of this little area. Last week up 5%. The week before it had a nice week as well. Yeah, 2 weeks in a row up 5%. The prior week it was up 3%. So it's just emerging from that base. CrowdStrike raised guidance on just about all metrics there a few weeks back, so it had a little delayed reaction. This is a Zscaler. You could see it last week just emerging out of this little flat base pattern, I guess you could say. It's just been in a holding pattern. It was up 3%. You can see the sideways action here on the daily chart. Just, marking time here. Hit that 162, then broke out. Had a nice week, 3% last week. And the last cybersecurity stock I'm going to show is QLYS. You can see the base on the weekly. Just a nice, big, symmetrical base. Cup with handle. Now it's emerging out of it. 2 weeks ago, the stock broke out 5%. And then last week, was flat on the week, while the Nasdaq pulled back slightly. So that one looks good as well. I got to do the oil and gas stocks, whether I like it or not. RRC, Range Resources, nice cup with handle pattern. And, they've been strong here. And you can see the volume the last few weeks have been really strong as this one emerges out of this cup with handle pattern. Still actionable. Looks good to me. Murphy is another one. Pretty similar to Range Resources. Long period of consolidation. You can see the 48-week consolidation, 36% depth in the base, and this one is just starting to emerge. Yesterday had a nice 3% day as the oil prices spiked. So it's good to diversify, I guess, if you're into that oil and gas stock. This is another one with a long consolidation. This is FANG, which is Diamondback Energy. You could see the kind of the base on base pattern here, the cup pattern, then kind of like a flat consolidation pattern. So this is this one is 20 weeks and this is 48 weeks, so 68 weeks. So this has been a long time coming. And this one is starting to move now, and you can see the volume coming in on the daily. And that's enough with the oil and gas. I want to go to the semiconductor stocks. We need the semiconductors and the software to move if this new bull market with artificial intelligence is going to have be legitimate. This is Applied Materials, and this one's just consolidating in a base. That's why I showed that. The equipment stocks are looking better than the manufacturing stocks. Applied Materials, and the other one was Lam Research, consolidating in a base. That's all. They're just not ready to move yet, but consolidating, which is good. Earnings coming up next week. So we'll hear from Lam Research, and I think ASML is reporting as well. So those stocks are going to move one way or the other. That new data point. This is Applied Materials, had this broke above this long-term downtrend line, right? This has been selling off, not going anywhere. It also pulled back to its 200. And then it broke above the downtrend line and then pulled back to the 50 on Friday. But it has, it gapped up here and it filled that gap. That's one positive. I mean, this old pivot was 102.43 and it ran up and just as, it doesn't have the numbers yet. So we'll have to wait and see. They're going to report on Halloween. But AMD is an interesting stock here. This you can look at this a lot of different ways. But they're going to have to deliver the goods. It's not going to go up just because of the chart, because it broke above a downtrend line. They're going to have to report solid earnings. That's enough of that. Let me see. Where was I going to go next? Oh, yeah, I did mention software names. ESTC. This is all the software names got hammered during the Federal Reserve induced bear market with them raising rates like wild banshees. But this had a 56-week consolidation and it gapped higher recently, gapped out of a base on let's see what day this was. Okay, September 1st, ran it, made a high of 82.24, then pulled back to the 21 where it found support, just trading kind of sideways here, but making higher lows. Since that breakout, it's making higher lows and finding support at the 21. So ESTC, the elastic, looks good. It got a boost when Cisco bought Splunk. This is a Bentley Systems. This is a computer software design stock, and you can see the the big sell-off. It consolidated, then broke out. Now it's in this stage 2 base with a cup shape pattern. You can see that on the weekly, and on the daily it's a little more pronounced here, and you can see this nice pullback to the 10 on Friday with the general market weakness. That one looks good. CDNS cadence is another one. Cup with handle trying to emerge, pulls back with market weakness, but I think if the market cooperates, this one could move higher as well. And that's it for me today. There you can see it on the weekly, the little cup with handle pattern. But in honor of the great Steve Jobs, I have one more thing, and that is the IPOs that have been coming out recently are just way overvalued. This BIRK stock came out last week with they tried to open it with a $10 billion valuation with about 1.3 billion in sales. Nice try. They couldn't get any buyers. I think it opened about 42 or so. But, it's selling off. This is nowhere near, what's the market cap now? 6.8. That's got to come in. A lot of these that have come to market, ARM is another one, way overvalued. This thing still needs to come in a little bit. 52 billion market cap, that's a joke. And I'm not going to get into all of them. The ones that have come out. Maple Bear, yeah, you can see how the retail people have been getting hammered. If you chase these things, you got to let them settle down. I just got to say that these things coming to market are just way overvalued. You take a footwear stock like BIRK stock with 1.3 billion in sales and trying to value themselves at 10 billion. It's 6.8 now, as it's traded down to 36. But you take a stock like Skechers, which is in the same footwear category. These guys have like 8 billion in sales with a 7 billion market cap. One to one sales, that's about it. 2 to 1 is rich, and these BIRK is coming to market at like 8 to 1. Crocs, the same thing. Yeah, their growth might be slowing, but they have over 4 billion in sales and a 5 billion market cap. So BIRK stock with 1.3 billion in sales and a 6.8 billion market cap, that's just not going to cut it. That's got to come in. On Holdings is richly valued as well. The 7.5 billion market cap, with less than 2 billion in sales. So they said they're going to get to 4 billion by 2026, but that's a long ways away, and probably still needs more of a haircut here. 7.5 billion for them to have a larger market cap than Skechers or Crocs is kind of ridiculous. So, but BIRK is the one that I wanted to point out, and all these IPOs that are coming to market are just overvalued. Retail people chasing them are getting hammered. And I just got to say, stay away. And with that, I got to say, we never give up. Thank you for watching. Have a great weekend. Got some really good setups, stock setups at mcstockcharts.com. So you can check that out as well. Anyway, have a great weekend.